Let me tell you about an account that I love for children that I personally opened for my 5-year-old niece. It's called the Index Universal Life Insurance Policy. Now, I have this type of life insurance, but it's structured a little bit different for a child. When I first got this policy, my niece was a baby, so her cost of insurance was pennies on the dollar. I'm able to overfund her policy, put in a bunch more cash that gets invested. Every month she can make up to 15% in interest, but if the market drops like it did this year, she'll get as low as 1%, so she can't lose money. This is also a permanent policy. So if 20, 30 years down the line, my niece wants to get life insurance, she doesn't have to. Her TT's got her covered because she has a permanent policy that doesn't expire. Now here's the catch. You can only get this policy for a child if the parent or guardian has double the coverage. So for example, if I wanted to get my niece a $100,000 policy, her parents had to have at least a $200,000 policy. So here's what I did. I opened a policy for my niece and her mother. Her mother owns it. I just pay for it.
This is 100% true. You can actually open up a policy for a child once they turn 14 days old, and they'll be able to keep it to age 121. And even though it is classified as a juvenile policy, they can earn the same rates of return that an adult policy can earn, which means a lot of years of compounded growth. Now, one update to this video is that now a lot of life insurance carriers will allow you to insure a child even though the parents are not covered. Now, that's a recent change. However, they did put a limit on how much life insurance a child can get, and that's $250,000, which is not bad at all. So follow for more financial breakdowns.